Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra with me, Shail Patnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. But it's panned out to be a weekday for the Indian markets yet again on the weekly expiry of the Nifty. It's down by 212 odd points now, trading near the low point of the day, 24,757. So we have slipped below the 24,800 mark as well as far as the Nifty is concerned. Barring the IT sector, all of the other sectors of the Nifty are down in the red, led by losses which are sharply being seen on the Realty, on the Auto pack particularly. Over 3.5% kind of losses can be seen on these particular indices. To counter it, IT index is up by 1.2%. It's strengthened its position right from the morning trade, and we do see several other stocks among the top movers on the Nifty are only from the IT space. So Tech Mahindra, Infosys, Wipro, L&T Technology Services, these are the key stocks that are actually buzzing in trade. Apart from this, Power Grid, Hindalco, SBI, these are the other stocks, and Reliance Industries, of course, that's somehow protecting the markets from a deep sell-off. But it's just a handful of names on the Nifty that are holding up into the green. But it's a broad-based sell-off that you can see across the board on the Nifty as well as in the broader markets as well. Good afternoon to all our viewers and good afternoon, Shail.
Good afternoon, ladies and gentlemen. It's the low of the day as far as the Nifty is concerned, and it's a painful weekly expiry for the index today. It is also in the process of testing the low of 7th of October. So a couple of things that are working against the index is that this might just turn out to be the ultimate test whether the rally that we had seen from 7th October low of 25,694 all the way up to 25,212, whether that was a dead cat bounce or not. The scale of the sell-off is pretty dramatic, and let us see whether 24,694 holds or not. If it doesn't, then we see a nice sell-off for at least 24,500, and then we will again take a call on what will happen apart from IT, and that's mainly because of a strong show that has come in from mid caps such as Infosys and L&T Technology Services, and of course the expectations of a strong show by Infosys and Wipro, because HCL Tech came out with good numbers about a week ago, is the only reason why you see a 1.2% uptick on the IT index, 532 points higher. But the overall story for the market is pretty painful. Just look at the advanced decline ratio. Only 539 shares are in the green compared with 1829 in the red. So it's an easy 2:7. For every 2 shares that are in the green, there are 7 that are in the red. We track 19 indices for you. All 19 except for the IT index are in pain. The losses are led by the auto index. No surprise there. It's the sell-off on Bajaj Auto. We'll just get the Bajaj Auto chart on the screens for you. The volumes are phenomenal. 3,300 crores of shares of Bajaj Auto have been traded, 12% lower. The counters at 28th August low for 3 reasons. The con call of Bajaj Auto said that the festive demand is less than tepid. Not even tepid, but less than tepid. Barely 1 or 2 percentage point growth in two-wheeler registrations on the government portal called Vahan, and at the same time the inventory numbers are rising, and thirdly the raw material costs are up. All 3 put together just put a spanner in the wheel as far as Bajaj Auto is concerned, and with it went down TVS Motors, with it went down a sharp sell-off in Eicher Motors, Hero Motors. All of them are now showing signs of very heavy profit booking, and that has hit a lot of sentiment on Dalal Street. Even 4-wheelers are not spared. You can well imagine if there is no demand for a 2-wheeler in the festive season, 4-wheelers are expensive, and therefore you see Maruti down 2.4%, you see Tata Motors slipping 1% lower at 902, and all this put together is creating pain for the broader markets with us. No better person than Sunny Agarwal to discuss the state of play in the markets, Deputy Vice President and Head of Fundamental Research at SBI Securities. Namaste, Mr. Agarwal. A very warm welcome to you. First, your reaction to Bajaj Auto results. Is it overdone, or this was only expected?
Yeah, good afternoon, Shelji. Good afternoon, Sakshi, and thanks for having me on the show. I think Bajaj Auto was priced to perfection. So we have already seen, if you remember, stock used to trade in the band of 3,800, 4,000 for a pretty long period of time. And during the last 1 year, stock has more than doubled based on the obviously backed by the robust volume growth and number delivery what we have seen during the last 2 to 4 quarters. But again, a slight disappointment, especially on the commentary side on festival season. But one has to keep in mind that festival season has not yet over, so still 50% of the festival season is yet to pan out over the next 15 to 20 days. And yes, overall commentary was weak at industry level. But if I try to find out some positive point as far as Bajaj Auto is concerned, I think many positive factors are at play for next 2 quarter. EV market share has significantly improved, new product launches, Freedom, the new bike in the 150, 125cc category has received very good response. Export markets are doing well, Latin America, Nigeria is improving. I think, again, since the stock was priced at perfection, I think we are seeing some profit booking or maybe hammering by the bears. Maybe a day or two more will be needed for stock to settle. But we continue to remain bullish on the story from a long-term perspective. And our fair value is close to 13,000 rupees and investment horizon of 12 to 18 months.
Very good afternoon to you, Sunny. Good to have you with us. The market's continuing to slide even further. Now we've tested 24,750 on the downside, 232 points gone there. I think we've been correcting for about 3 weeks odd or so in the market, so maybe 1 month. How much more correction from here on do you still believe is there for us to see, at this current level?
I think the way earlier rally was purely driven by liquidity, I think again this sell-off is also driven by the liquidity, wherein we have seen a very aggressive selling by foreign institutional investor. So I think already in the first half of October, we have seen selling to the tune of 67,000 crore. And such selling was seen in the month of March 20 COVID month. And I think that's a pretty big number. And that is the reason we are seeing a big dent on large cap companies where predominantly FIIs have parked their money. And I think the selling has to subside from foreign institutional investor for at least benchmark indices to remain stable. If you see small cap companies, there we are already seeing a very good handsome rally based on either numbers or based on the shareholding pattern which are coming and many market investor increasing stake in those companies. So I think sell-off is a function of foreign institutional investor pulling money out of the market. Coming to technical levels, as I was discussing with our technical team, I think the next support comes to 24,400 or maybe 24,000 is the next big support. So let's see how this story selling pan out over the period of next few days. Coming to earnings, I think a stock specific reaction or sector specific reaction will continue in the market. And I'm hopeful that that numbers from the banking sectors are yet to start coming in, especially from the heavyweight. And I hope that at least a consensus estimate will be maintained over there. Otherwise, we may see a further sell-off from a heavyweights like banking, and that can drag the index further lower.
Okay. Sunny, apart from this, if you could also help
243,
us.
ladies and gentlemen. Let's look at. Yeah, please continue, Sakshi. No issues.
Apart from this, Sunny, if you could also help us understand where is the safe haven in this current market? Is there any key sector that you are still bottom fishing at the current levels?
I think capital market as a story still continue to look good. So we have seen a very blockbuster number from Angel One and clear cut guidance that the impact of the calibrated tightening in for F&O segment over the period of next 3 to 6 months, the impact won't be very significant, and that is the reason capital market as a story continue to look good. We have seen a robust inflow on mutual fund side, demat account addition. I think entire capital market, whether it is broker, wealth managers, continue to look good. Another thing which we like is railway wagon, where we have seen a significant correction across all the three companies, whether it is Jupiter Wagon, Titagarh, or Texmaco. Again, sitting on a pretty robust order book, and now prices have corrected significantly from the top 25-30% correction. And I think there it lies an opportunity to accumulate such companies. In addition to that, consumption stories, especially on a premiumization side. So, companies from jewelry, although we have seen a pretty strong run up on the jewelry counter. So, jewelry again continue to look attractive. Looking at the commentary coming from all the big guys, that is Kalyan, Senco, or Titan. So, jewelry as a segment continue to look good. Fashion apparel business looks good. So, companies like ABFRL, Urban Fashion. So I think opportunity to add on to the consumption sector on basically premiumization or discretionary side of the consumption stories.
Sunny, what according to you is the reason for this newfound love for Infosys, record high one, and the frontline IT stocks are not giving any kind of guidance or any kind of projection which would gladden the heart of a long-term investor. In fact, anybody and everybody that we have spoken to has said that artificial intelligence and chat GTP and all such things will actually wipe out Indian tech players. Why is it at a record high, especially Infosys?
I think again, large cap IT companies, tier one guys, there we have seen a decent kind of number delivery from TCS or for that matter SCL Tech. I think again, City is very gungo that for Infosys today the guidance may be revised upward, especially looking at the exposure on BFSI side where we have seen a pretty good set of number from the other IT players. I think that is the reason we are seeing some optimism on Infosys. Right, but again, if you ask us personally, I think we continue to remain bullish on mid-size IT companies which are growing at north of 20%. Recently, a case in point, New Gen Software reported a very robust set of number and aspire to become a $500 million revenue company over the next 3-4 years. Currently at 1,200 crore. I think pretty long runway in terms of product companies like New Gen Software. So I think companies which are growing north of 15-20% within IT packs, mid-size IT pack, those are the companies to be in. Large cap IT companies, we believe will continue to grow maybe at a mid-single digit or high single digit kind of number for FY26. And again, there the returns can also be subpar as compared to the indices. And again, today being an big sell-off day, maybe a kind of defensive play is something which we are seeing panning out in the market in terms of buying in IT stocks and sell off in the other stocks. So kind of sector rotation.
Okay. Right. Some numbers coming through. Tata Communications has come out with its Q2 numbers. Net profit has improved by 3% at the rate of 227 odd crore rupees. This is a year-on-year jump of 3% odd for the company. Now, when we look at the other numbers, revenue I think has come down now this time around for the company. When we look at the consolidated figures, for sure we have seen even on the profitability figure on a sequential basis it's a dip from 332 crores to about 227 odd crore rupees. We've also seen a dip even in the revenue figures as far as Tata Communications is concerned. Okay, another set of numbers now overlapping. Now we have Havells coming in. That will be interesting to note. Here the profit has jumped from 249 crores to 272 crores. This is a year-on-year jump for the company. The stock is still down by 2.7%. But the profitability figure that we have first is improved. Even the revenue figure has improved on a year-on-year basis from 3891 crores to about 4532 crore rupees for the company. Uh, Remember today, Polycab also comes out with the numbers, and both Havells, the expectation for Havells revenue was somewhere to the tune of 4300 odd, and it's coming at 4532 odd crore rupees. So it's better than estimate as far as at least the revenue figure is concerned. So these are, and even the EBITDA figure I think has improved from 373 crores to about 380 odd crore rupees as well. Those are the kind of numbers that are coming in. Let's get in Sunny to address Havells for us. Again, one of the strongest stories of this year that we have seen in the FMCG market, the fast moving electrical goods space. Last 3 months, however, it's been just about a 4% uptick. Your own sense on how would you really look at FMEG player Havells?
I think, just listening to your commentary, I think EBITDA margins are under pressure in this quarter. So I think the consensus estimate was close
Yeah.
to 10.9% for this quarter. And I think margins are under pressure. And I think that's the big disappointment. And maybe the recent volatility in the commodity prices, especially copper, may have dampened the EBITDA margin. So let us hear on to the management commentary. Top line definitely seems to be a beat, but I think there seems to be pressure on EBITDA because of maybe gross margins coming under pressure. So let us wait for the management commentary in terms of EBITDA margin trajectory for the quarter.
251, we have about 39 minutes left for trade, and so far the broader markets are not looking good at all. What you see as a cut on the Nifty is barely 1%, but the falls are even larger across the board. Look at how the mid cap 100 index is down 1.5%, almost 1.6%. Here the advanced decline ratio, out of 100, just 10 stocks are in the green. Look at the small cap index, down about 1%. Out of 100, just 25 stocks are in the green. And of course, you have the NSE 500 losses are more than the Nifty, 1.2% lower. And out of 501, 424 stocks are in the red. This would be the opportune movement to look at stocks that are making record highs. Remember, when there is pain across the board, that's the time to look at stocks that are climbing fresh peaks, because that gives you an idea of superb outperformance in a falling market, a stock hitting a record high. And we'll take Sunny's opinion on CAMS. This is 1% higher. I think early morning price was 49.12, I remember fairly clearly. Sunny, what is driving this entire AMC broker space? You have record highs on HDFC AMC. There are great moves happening on UTI AMC, and of course brokers are doing pretty well. Look at Angel Broking, all on its way to reclaim its all-time high, and now CAMS. What is your top pick in this entire space of listed brokers, listed AMCs, and listed mutual fund ancillaries that make life so easier for investors these days?
So coming to AMCs, I think a pretty robust set of numbers from HDFC AMCs and HDFC AMC. And what we have seen is that the share of high yielding equity book has increased in the overall AUM, and that is leading to the increase in overall yield at PBT or PAT level. And at the same time, with markets close to, or AUM at close to life high, that's giving the benefit, mark to market benefit on own investment book. So I think all the 2-3 levers are playing out simultaneously for all the AMC companies. And Street is hopeful that looking at the HDFC AMC numbers, all the other players, whether it is Nippon, UTI, or for that matter, Aditya Birla, AMC will also continue to report healthy set of number. Coming to topic post recent run up in HDFC AMC, I think I would like to go ahead with the NAM Nippon India AMC and as a turnaround play on Aditya Birla AMC, where we have seen a lot of structural changes implemented by management during last 6 to 12 months to recoup the lost market share. So I think these two are the top pick as far as AMC is concerned. Coming to broking, I think within broking play, obviously Angel One, although we may see a quarter or two impact due to the calibrated tightening in FNO regulation and management has went on record to say that 13 to 14% of the business may get impacted. But again, the speed at which they are adding the new account and the launch of various new businesses, whether it is a wealth management, assisted partner, distribution business. So I think all these businesses will start contributing to the bottom line over the next 2 to 3 years. So again, a long-term play on Angel One. And in addition to Angel One, I'd like to bet my money on Motilal Oswal MOSL, which is again a conglomerate, a combination of broking, investment banking, as well as AMC business. So Motilal Oswal can be looked upon on deeps, buy on deep because we have already seen a big run up as far as Motilal Oswal is concerned. And moving on to mutual fund ancillary, again, indirect beneficiary are both the player, whether it is CAMS as well as K Fintech. But looking at a valuation, I think K Fintech is something which is trading at a relatively cheaper valuation compared to CAMS. So I would like to bet my money on K Fintech on deeps or for a medium to long term perspective.
Okay. Sunny, we would also like to take your view on the Hyundai IPO. Day 3, finally it sailed through, and there's an oversubscription now, over 200% of a subscription that's coming in. It was seeming difficult until the morning as well, whether the IPO will sail through, but suddenly we did see a lot of action, towards the midday, and we have finally seen that oversubscriptions are coming in. Could you help us understand what would the oversubscription on Hyundai IPO really mean for the auto sector as a whole, the sector on this kind of a day when the biggest ever IPO is coming into India as the day 3 and finalizing? Auto index itself is down by 3.5%.
I think again a very large player in terms of passenger vehicle, second largest player, and with a significant export from India for at least Asian market. So I think the kind of interest from the marquee investor, whether it is long only FII or domestic institution, again they are here for a long term perspective. Obviously, automobile as a category, passenger vehicle as a category is still under penetrated in India. And if somebody has got a 3 year, 5 year, or 10 year horizon, definitely Hyundai will continue to deliver a robust set of numbers. And one positive aspect which I like about Hyundai is the post distribution of one-time dividend. The ROE, ROC are best in class for Hyundai, north of 30%. And in case company is able to deliver a robust set of numbers over next 3 to 4 quarters, I think don't be surprised that Hyundai will start commanding premium over market leaders like Maruti on passenger vehicle side. So I think again a long-term play. Don't expect a listing in like Bajaj Housing Finance, where on listing day the stock gets double. I think maybe a flattish to a 5 to 10% kind of gain on listing day. So if somebody is planning to apply, definitely the investment horizon has to be long term. And again, can be added gradually post listing also. So no need to go and apply entire money and corner the share through IPO. So maybe some part through IPO and some part post listing, looking at the September and December quarter numbers.
Okay. Sunny, from your research desk, what have been upgrades in price targets for existing research, and have you initiated fresh coverage with a buy or fresh coverage with a sell on any stock?
Yeah, so coming to coverage, recently we have initiated coverage on high-tech pipes. So it was at close to 160 rupees and the price target was 200. I think we have already achieved that target. But again, we continue to remain bullish on the business. The way capacity is getting expanded on structural steel tube industry for high-tech pipe, moving on from zero point 0.3 to zero point 0.7 million ton, and then from zero point 0.7 to 1 in FY26. And again, the company has recently mobilized 600 crore through QIP to expand the capacity from 1 million ton to 2 million ton. So I think a pretty long runway in terms of earning growth as far as high-tech pipes is concerned. So maybe buy on dip is the strategy which one can look at as far as high-tech pipes is concerned. And in addition to that, a market leader in this segment, that is APL Apollo Tube. Looking at a provisional business update, I think we continue to remain bullish on that company also, and that's under our active coverage. So APL Apollo Tube is also on our radar from this sector. In addition to that, within jewelry, Senco Gold is something which is under our active coverage. And looking at a very strong provisional business update, I think September quarter is something which will continue to do well. And I think the fair value here is close to 1600 rupees as far as Senco Gold is concerned. On defense side, Zen Technology is under our coverage, and there we feel looking at the way company is winning order back-to-back order on various product side. I think Zen Technologies can also be looked upon from a medium to long term perspective.
Right. Sunny, before we let you go, almost it's a certainty that the 7th October low will be tested, and maybe the Nifty will go all the way down to 24,450, 24,200. What do you think is a good level to maybe step in to buy a Nifty ETF, or to buy maybe a nice equity diversified fund? Where do you expect this correction to sort of come to an end? Now about a 5.7% dip on the Nifty.
I think maybe 24,000 or 23,500 is a level where I feel Nifty should stabilize. And again, if somebody want to invest through ETF, I think a gradual staggered investment strategy should work out over the period of next 2 to 3 months. After a pretty long rally in the market, I think it's time for consolidation, maybe time-wise correction for 2 3 months. So no need to go and deploy your fund and disposable income or surplus fund at one go. Gradual accumulation is the right strategy. And as you rightly pointed out, Nifty Bs or mutual fund, diversified mutual fund is the right way to park your money. And just one suggestion, don't chase any thematic fund at the current juncture. What we have seen is that thematic fund always come at the top of the bull run in that sector. So better to stick to a diversified fund, flexi cap, or maybe a large cap, because what we feel is that in terms of valuation, large caps are relatively placed as compared to mid cap. So maybe over next 1 year, we may see a strong outperformance from large cap post the selling from FI is done with.
Okay, well, thank you so much, Sunny, for being with us on the show and sharing all these wonderful insights. Good to have you with us. Hope you have a fantastic time till the time we meet you next on air. And now to continue the discussion on the last half an hour of trade today, viewers, we are going to be welcoming Prashant Tapse, our research analyst at Mehta Equities, who is now joining in. Warm welcome. Prashant, good to have you with us. Tell us, what is the current setup in the markets really telling you to do? Are you staying on the sidelines, waiting for some more deeper correction to happen to finally enter, or have you already started to do some bottom fishing?
I think yes, I am waiting for more bottom to happen. It will be obviously you will touch the market very low today, closing very negatively in terms of market trend. I think I am expecting 24,200, 24,400 can be a good range for new fresh buying, and we are very much near Diwali again, so there is a good sale in the market, so we need to grab those opportunities. Despite global markets are very much stable, we are today in the negative territory. Maybe the reason maybe Bajaj Auto was the major heavyweight today, which is hitting Indian markets to the lower levels.
Okay. So in this market, Prashant, where are you keeping your eyes out on? Any key stocks?
I think we are into trading market, so I am focusing more on IT. From last 2 3 days, we are having a call on Infosys. We had a buy call on Infosys call option of 200 strike price at 14 rupees, and I think today it's almost trading at 25. So I am expecting a better guidance from Infosys, which will take Infosys towards 2000 mark, maybe tomorrow or day after tomorrow. So we are focusing more on IT.
Fair point. And it's only IT that is putting the screen to some good effect. 1.2% higher on the IT index itself. What talk about individual companies? Strong support coming in from the entire mid cap sector, which is Emphasis, top performer after very good earnings, 5.9% higher. Infosys ahead of its earnings, almost 2.5% higher. Tech Mahindra, 2.3% higher. Let's see whether there are any volume buzzers. Yes, it's Emphasis, which is trading 5.7 times the 5-day average, almost 49 lakh 78,000 shares. A strong move in L&T Technology Services. Again, this is a bit of a profit booking, but this is mainly on account of the results that had come in late evening yesterday. And you have Infosys ahead of its earnings, showing a fairly robust volume, 125% higher than the 5-day average, which is about 70 lakh shares. Prashant, one space that is not doing very well is Nestle. Let's look at the earnings, and then I'll request you to give your view on the company. Nestle for the moment is under selling pressure, and that's because sales are up just 1% year on year for the September quarter at 5,100 crores. Net profit is actually down to the extent of 986 crores, down about 7%, and of course there is a fall in EBITDA as well. What are your charts on Nestle telling you?
I think the chart was already indicating from last 15 days. The stock has come down from 2,700 to 2,380 today. The negative update on the results which has come today with respect to missing the Q3 concerns on growth as well as on the profit margin. So I think the news was almost discounted in the price, and today was just a one-time reaction today. So technically I think the bottom, we are very much near the bottom. I think 2350, 2380 can be a range for 1 or 2 days. We may expect 1 or 2 downgrade from top brokerage houses tomorrow morning. So that will give us a bottom for this Nestle on a technical basis. So I will be going buy on this at very much near 2350 levels. So I'm positive on the stock right now.
Okay, got it. Let's speak to you about the other pockets then. Prashant, could you help us understand, are you looking at the gold related stocks right ahead of the festive season? Is that looking interesting to you at this point in time?
I think yes, always festival season, gold as a product, everybody is going to have a buying opportunity. So I am very much bullish on Senco as well as on Kalyan. So these two stocks are on my trading radar. So I think Kalyan can make better opportunity in this market. So I think if with a view of 3 to 6 months, Kalyan can be a best stock to accumulate with a target of at least 820 to 880 levels with a 1 or 2 quarters view. So technically, I think this is the best class stock to accumulate.
Okay. And what about the financiers? Are you looking at that too in the same breath?
I am very much negative on all the gold financing stock due to their yields. I think their yields are going up, but their management, and there are some concerns rise in the markets regarding Manappuram Finance and all regarding the gold buying and other regulatory aspects. So I am very much negative on gold financing stock.
Okay, not a problem. We have now 22 minutes left for the markets to pause, at least for today. You remember all these memes that come in when there are massive selling pressure, Surya kyun nahi ast thora, all those of them are now coming back into action. We just have a 220 point cut on the Nifty, and but people are really worried about this sell off. Nevertheless, we must always take these kind of dips as an opportunity to get back into quality stocks. Prashant, any view that you would have on Reliance? We have the date for the record closure for bonus issue now with us, and it's already below 200 DMA. Every part of negativity that could be possibly known is with us. The counter is in the green today. Is the selling pressure over?
I feel the stock is almost near the short-term bottom. I think 2700 was a level which we were waiting, and it has crossed once yesterday below 2700, and now it is trading above that level. So I think despite having these updates on the bonus, I am going to have a bullish view on Reliance for a very shorter period of time. For 1 or 2 quarters, I think the stock again it can rally towards 3000, which is almost like 8 to 10% rally from these levels. As you said, you are right, saying that every bad news has been discounted. Even technically, it has crossed near to the 200 DMA. So I think it's a good level to start accumulating as an investor.
Okay. Prashant, apart from the tech giants that are buzzing in trade today, Power Grid has pulled up 1.1% higher, 331. I think it's the lone PSU stock also that's actually holding up into the green. How are you looking at Power Grid, and can the stock continue with its upward momentum?
I think yes, it's a good level to start buying at these levels with a very small stop loss of 320. We have a breakout level near 340, and I think if it closes above 340, there can be a good rally up to 360. So it's a good level to have a fresh position at this point of time.
Okay. So that's as far as the PSU space is concerned. But overall, on the PSU pack, do you have a view? There's been a long drawn correction already. Is there more to be had?
I think in the PSU, I am going to have a positive view on SBI. I think even results are very much due very near to 810, 815. So it's a good level to accumulate. The first target would be around 825, and 840 would be second target for SBI. So I think the full year target for the next financial year, the profitability can be around 75,000 crores from 68,000 crores right now. So with this view, the stock can have a small short-term rally towards 840 levels.
Okay, ladies and gentlemen, 312. I think Sakshi, one can safely say that we will not be making a fresh bottom as far as the Nifty is concerned. We have about 18 minutes left, and 24,700 seems to be holding for the moment. Of course, it's at 753, but let's hope that we have a fairly quiet 18-12 minutes as of now. There's no point taking a STBT or BTST in a market which is about to crack further. Let's look at Bajaj Auto. Now, as I have mentioned, the selling is phenomenal. 13% lower the counter, and 3589 crores, 3,589 crores worth of transactions have been done. Prashant, what is a good entry level according to you on Bajaj Auto?
Today morning, everybody is asking for the same Bajaj Auto. So I have a good level to accumulate. That is 9,700 to 9,600. This can be a good level to again start fresh buying on Bajaj Auto. It was really surprised to see management commentary yesterday with respect to their comment on the festival season, which has really started recently from the Ganpati festival. I think there are a lot more festivals till this new year end. So I think the stock can again conquer its old new high. But a good level to enter would be around 97, 9,600, a best level to add on for a fresh investor.
Okay, got that. And within the tech space particularly, what are you really looking at? The one which is continuing to hold the fort at this point in time in the market, where would you really keep your focus?
I think TCS can be the better safeguarding bet right now, considering Infosys already trading at a near-term high. Post the result of Infosys, I think TCS will have a rub-off effect into the technical space on the larger cap. But in small cap again, emphasis I am still bullish on that. There may be another 100, 200 momentum price momentum in emphasis. So I think in the mid cap space, one can look at emphasis for a target of 3200, and in the large cap, TCS can be a target for 4300.
Okay, wonderful. So that's as far as the IT space is
Sakshi, I think
concerned. Yes, sure.
we'll mark Havells.
Yeah.
There is a massive breakdown, and this is not looking really good from the point of view of those people who are in the counter. But you just might be creating an opportunity for newer players to come into the stock. Of course, I think margins are in terrible shape. Let's revisit Havells earnings. They just came about 5-7 minutes ago, and here is Havells. Okay, you have revenue at 4,540 crore rupees for the second quarter versus 3,900 crores year on year, which is fairly good. I think what is in trouble is the margin. Yes, EBITDA margin for the second quarter is 6.17% versus 9.56% year ago. So there is actually a 33% fall in EBITDA margin against an estimate of 10.6%, which was now at 6.17. What is the profit after tax number? I don't see it anywhere. Nevertheless, it's the margin pressure that is killing Havells on an intraday basis, now 7.5% lower. Very heavy volumes to say, and the 200-day DMA is at 1741. Mr. Tripathi, Mr. Tapse, what do you think are Havells shares telling you? For the moment, we are at its lowest level since 14th May. So that 5 plus minus 5, it's a 5-month low.
I think yes, the trend is still negative. It was a surprise, 300 basis point negative pressure in the EBITDA. Even if you see KEI results yesterday, they were also down by almost 100 basis point in their EBITDA margin. So the overall sector is giving a lot of pressure. If you see even Polycab, we are waiting for Polycab results today. I think we will see a lot of pressure in the EBITDA margin. So overall, the sector is under pressure, same like what auto as a sector is being right now. So I believe the stock will be touching at least 200 DMI. That will be a level one need to watch. If not, 1700 can be level to watch out and buy it for long term.
Okay. Prashant, let's also get down to understanding, within the broader markets, the pain is escalating even further. How would you really look at the mid and the small caps basket as of now? How would you approach?
I think we are into Q2 earnings, so we need to wait and watch for all the earnings to come. A lot of pressure would be on the EBITDA margins. If there is a flat growth in EBITDA as well as some kind of improvement in the EBITDA margin, then only these mid caps and small caps will see some kind of fresh action going forward. So we should wait and watch for Q2 earnings and then take a call on mid cap and small cap. In this sector, I think if you want to see, there are 2-3 stocks which are under my radar. One would be almost, I think Bansal Wire looks good at these levels on a technical basis as well as on the Q2 earnings. So Bansal Wire can be a small cap which a trader can look at for a Q2 earnings for a 10-15% upside on these levels.
Okay, got that. So that's as far as the mid and the small cap space is concerned. Let's also look at any newer names that are coming in the broader markets as winners in this current market. very far and few between. I think Hind rectifies is something that Shell had marked. It still holds at 10% higher in trade. You have Landmark Property that continues to be in the upward run for the second or the third session, 10% higher. You have Karur Vysya Bank after a long haul, 6% higher in trade. Then you have IFB Industries that's also up by about 6 odd percent right now. These are some of the key stocks that are actually buzzing in the broader markets. Anything that strikes your attention within the names that I took, Prashant?
I think IFB would be a good stock again. In the pet food sector, IFB looks good. IFB again, festival season, there will be a good sale for all the washing machine, and also I think one should look at no, considering a fresh call buying at these levels, and if they are holding already, so I think 2400 can be target for near term.
Okay, Sakshi, let me mark some good news. Let's see Liberty Shoes, 5% higher. And not only is it at a circuit, it's also at a record high. So this is something that needs to be appreciated. We won't be taking a view on it technically because there's barely any volume. 51,000 shares have been traded, but nevertheless, one must appreciate a circuit on the upper side plus a record high in a market which is on the verge of a breakdown. Okay, apart from Liberty Shoes, let me also mark Indotech Transformers. Remember, I talked about this stock yesterday as well. Another 5% uptick and another fresh high in the making. What else is on the move which is worth mentioning on air? Okay, no, we will avoid these names. Yes, ICRA. I had marked this stock in the morning. This is post the CRISIL numbers. Early morning uptick was about 7-8%, but now it's quietened down a bit, 7,200. Morning high was 7,750. So these are, ICRA in particular is a quality stock where you've seen a very quiet kind of a overachievement. If you look at ICRA from its 17th May lows, it was at 5,000 and now 7,700 in a span of about 4 or 5 months. So that's the only positivity that I can make out in a market which is hell bent on breaking 24,694. Maybe not today, but obviously there will be pain. And within the railway space, Kernex Microsystems, the maker of possibly the best anti-collision devices, is also up 5%. I believe this is for the second day in a row. No, I think it's actually come down. Okay, my apologies. It was up 5% in the morning. No, not any longer. Actually, down 2.9%. Sakshi, what are you watching? 8 minutes left for trade to end.
Yes, it's panned out to be a really painful trading session with very low volumes and very select stocks that are actually up into the green. Largely, it's been a down day for across the board. We've pointed out a slew of IT names for our viewers, banking, PSU stocks that even Prashant has pointed out as well. Prashant, anything that you'd like to say on, Reliance Industries, 0.2% higher at 2713. The stock has been in a lackluster zone in the last 2 to 3 months odd or so. Now that the bonus record date is inching closer, how would you expect Reliance Industries to trade from here on?
From a post result, I think all the negativity is being not fully discounted in this price, and now people were waiting for the date to be announced, and yesterday evening the date was out for 28th October. So I think the long-term investors and the first-time investors, they will start accumulating this stock as a portfolio stock, because I think short-term there is a good an upside of at least 10% from these levels. on a 3 to 6 months time horizon. But as a long term, again, obviously there will be a lot of actions in terms of their geo and their retail actions and all. So I think for a long term investor, one should always focus on these opportunities when large cap stocks fell down by 10%, at least in some short term.
Okay. So that's as far as Reliance Industries goes. Any BTST, STBT trades from your end, Prashant? 324, right?
I'm taking Infosys again. We have an open call on Infosys, so I think a target of 2000 plus for tomorrow's opening. I'm going to have a BTST on Infosys.
Okay.
Sakshi, maybe that's the saving grace that the market possibly is looking forward to. You have a fabulous result from Infosys. Now, this is all speculation, right? Or maybe fond hopes. You have a fabulous result from Infosys. It takes off beyond its record high, and Reliance also clicks in, and we have a favorite move on the way up, because now 694 has been tested, and it could be completely reverse also, because we know that Infosys has this dubious record of either hitting the first lower circuit of 10% or the first upper circuit of 10% on its earnings day. If you go back into 30 quarters, you will see it's happened for 17, 18, either up or down. So I'm praying it will be up.
Absolutely. Yeah, that's what the hope is, and the only saving grace right now is the IT space stocks that are holding up the fort from the front. The space was largely seen as a forgotten and an untouchable one for this large part of this year as well. I remember the time, when nobody used to talk about IT shell, you would say that, for all those who have a long-term story, this is the best time to look at these IT stories. I think you had started to talk about it 6 months ago on this one. And finally, when the...
No, please continue. I'll give you my logic.
Yeah, so this is what has happened when everything is seen as lost. The IT space seems to be definitely from the front running row. You can see Infosys, TCS, HCL Tech, Wipro, all of them batting from the front, and even the mid caps are also supporting the sentiments. Not that we've had excellent earnings from any one of them, but you are actually finally seeing takers come back to the IT space. The rate cut hopes are coming into the fore as well. So all of those sentiments now playing up. Sure.
Absolutely, Sakshi. And see, the only logic for talking about, I think it was ITBES, the ETF of information technology services, which was at 33 rupees. I so clearly remember it was, somewhere like June 6th. The only reason to recommend it at 33 rupees was that, there was just so much of pain in the sector that nobody was keen to look at it. And now, if you see, the reason was that it was at a 50-week low. So 1 year low the IT Bs were at, and I thought कि बहुत हो गया, इससे ज़्यादा pain नहीं हो सकता. We've purchased PSU banking ETF at 27-28 rupees. It is now above 80. We have talked about that Mafang ETF, if you remember, the top 11 stocks in the Nasdaq at about 36 rupees. It is now around 100. So the logic is, that you buy pain, and you try to buy pain around 1 year low, 2 year low. 2 year low इस बाजार में कहाँ मिलेगा आपको? But the IT index was at a 1 year low 6 months ago. And from then on, the ETF alone, I am talking only of ETF, from 35 it is at 45, which is actually a 33% appreciation. So the only point that I often talk about is, repeatedly you will see me asking, L&T में क्या लगता है, Reliance में क्या लगता है, because there are around 200-day moving averages below that. That is the best buying zone. आप देखना जिस दिन Reliance का record date होगा, I think we have that record date early morning. Sakshi and my boss mentioned that in the common mail group. 28th of October. Right? So between 28th of October and 17th of October, you will see Reliance appreciate at least 5%. That is how markets work. When everything is priced into it, when it is completely negative, सब बहुत बुरा लग रहा है, हे भगवान कल बाजार ना खुले अच्छा है, छुट्टी दे दो. That is the time to buy. Remember L&T and remember Reliance, Sakshi. I will remind you on the day they hit record highs. Ki remember on October 17th, we talked about it.
Absolutely.
Nothing dies in the market, they all come back. That's the only learning. Yours.
Wonderful. Wonderful. Okay, we'll wrap it up at that now. Prashant, thank you so much for sparing your time for us. We've had a great conversation here on the show with you too. Let's see how the markets really pan out tomorrow, the last day of the week. And we hope there are signs of a recovery. All eyes on Infosys, the earnings and how that can be really leading IT space even further higher from here on. Fingers crossed for that one. Nifty ends the day 220 points lower, viewers, 24,750, about a 0.8% of a cut. The Nifty Bank 525 points lower, 51,275, that's an over 1% cut. That has underperformed the Nifty too. Sectorally, Realty falls by 3.8%, top losing sectoral index, 3.5% cut for the auto space. Consumer durables down 2.5%. The Nifty next 50 mid caps and small caps down about 1% to 2% each. Barring the IT space that held on 1.3% higher, the loan sector that ended in the green, the rest of the spaces they all slipped. Infy, Tech Mahindra, TCS, Power Grid, L&T Technologies, State Bank of India is among the top movers. On the downside, Bajaj Auto down 13% at 10,090. Shriram Finance, Nestle after the earnings drops 3.4%. M&M, Hero Moto, Adani Enterprises also see sharp cuts. F&O space, Emphasis continues to rule over 6% uptick. Nalco, Infosys and Tech Mahindra, another 2 to 6% up in trade. When we look at the draggers or the losers as far as the F&O space is concerned, Bajaj Auto, top loser. Havells follows with a 7.9% cut. In the F&O space, BHEL, Oberoi Realty and Piramal Enterprises also among the top drags right now. We'll wrap it up at that, viewers. Thank you so much for taking the time out for being with us. But do stay tuned. Enough and more action beyond the stock markets will be covered on Business Today television. Stay tuned. We'll be back for the market coverage tomorrow morning. Stay tuned. It's now further slipping lower, almost a 3% dip on the Nifty Auto Index alone. Bajaj Auto is now down over 9%, TVS down over 5%, Hero Moto down about 5%, Eicher down 3%, M&M down 2.5%, Maruti down 2%, and all the other stocks are also now trending down, be it the frontline auto majors or even some of the major auto ancillary pack stocks as well. Of course, there is this muted festive demand that is probably one of the biggest reasons why we are seeing auto space as a whole, in the slow lane right now, Aditya. But would you be enthused to buy some of the stocks in these dips within the auto pack?
Well, a couple of four-wheeler stocks looks good, like Mahindra and Mahindra. Means this stock has been outperforming the whole auto pack for last couple of months now. Yes, means we are seeing some pressure for last 3 3-4 trading sessions, stock may see some more dip. It may come towards 2900, 2850 odd levels. But around those levels, stock gives a very good buying opportunity. So if I have to buy any stock from four-wheeler, then Mahindra & Mahindra will be one stock. But not at current levels. I will wait for another 100, 150 rupees correction. Around 2850, 2900 levels, we are a buyer. I'm expecting again it may move toward 3250 to 3300 levels in short span of time. But if you see two-wheelers, still two-wheelers are looking slightly weak. After today's correction, means most of these stocks have given a negative breakdown, be it Bajaj Auto, TVS or Hero Motors. So I will wait for in two-wheelers for some more time. Let the stock correct, make some base and show some sign of reversal. But four-wheelers, Mahindra & Mahindra looks good.